Welcome to this episode of Living Luxury. We will discuss Michael Burry, one of the most successful investors of our time. Michael Burry, best known for his famous bet against the housing market in 2008, not only forecast the crash, but also profited handsomely from it. In this video, we'll delve into his investment philosophy and explore his perspective on current market conditions, including the recent bankruptcy of a large Silicon Valley bank, as well as where he believes the country will be in the next 6 months. Subscribe to our channel for daily videos and leave your thoughts on the story below. Michael Burry, a former physician turned hedge fund manager, was one of the few investors who predicted the subprime mortgage crisis before it occurred. Burry began researching the housing market in the early 2000s and discovered that the subprime mortgage industry was plagued with fraud and unsustainable lending practices. Burry made use of his skills in analysis to recognize that the number of subprime mortgages being provided was rapidly increasing, but at the same time, the quality of these loans was deteriorating. This was Burry's observation. It came to his attention that the market was being flooded with high-risk mortgages from subprime lenders, which were being bundled into mortgage-backed securities and sold to investors. Burry predicted that the high-risk mortgages will eventually cause massive defaults and a collapse in the property market. In order to capitalize on this forecast and turn a profit, he invested in credit default swaps, CDS, which are similar to insurance policies that protect against the default of mortgage-backed securities. The credit default swap, CDS, market was relatively small at the time, and many investors were unaware of the possibility of a widespread decline in the housing market. Burry's foresight proved fruitful, and when the market collapsed in 2008, his hedge fund, Scion Capital, made a profit of more than $1 billion. Burry's wager against the housing boom was a contrarian move that bucked Wall Street consensus. Many investors anticipated that the housing market would continue its strong performance and that the business of subprime lending would continue to grow. Burry's research and analysis, on the other hand, enabled him to uncover and exploit the market's underlying flaws. Burry's feat in foreseeing the 2008 housing market catastrophe placed him as a financial legend. His analytical ability and knack to detect trends before others do continue to fascinate investors to this day. He does this by demonstrating that the best investments are those that acquire a contrarian attitude. Burry has been sounding the alarm about the dangers that are posed by the monetary policies of the Federal Reserve, which, according to him, have led to an artificial inflation in asset prices. He contends that these policies have led to a significant growth in debt, which in turn has posed a threat to the continued health of the economy over the long run. Burry has issued a warning that the nation is on a cusp of an inflationary phase, which is exactly what we are experiencing right now. He is of the opinion that the practices of the Federal Reserve, when combined with the government spending, will lead to an explosion during the next few months. Burry urges investors to hedge against inflation by investing in commodities such as gold, silver, and copper. Burry's warning concerning the Silicon Valley bank's insolvency and the current market conditions should not be discounted lightly. As a skilled investor who has a track record of spotting trends before others do, Burry's ideas deserve to be regarded carefully. Investors should take precautions to protect their portfolios from possible market downturns and avoid investing in companies whose stock prices may be artificially inflated as a result of a technology bubble. Investors should also protect their portfolios from possible market downturns by diversifying their holdings. The basic analysis of firms, industries, and macroeconomic trends serves as the cornerstone of Burry's investment philosophy. He is of the opinion that locating long-term trends that have not yet been included into the market price and investing in accordance with those trends is the most effective way to achieve financial success through investment. In addition to this, he stresses the importance of maintaining a strong margin of safety across all of his assets. This ensures that even if something goes wrong, the fallout will be kept to a minimum. Burry continues to make audacious forecasts and investments in areas that he strongly supports up to this day. In a recent tweet, he highlighted the failure of a bank in Silicon Valley and asserted that it was a sign of a larger tech bubble and that we were in for a challenging ride as a result of it. He is of the opinion that the current state of the market is reminiscent of the dot-com boom that occurred in the late 1990s, and that investors should be cautious. Burry is of the opinion that the United States is on the cusp of entering an inflationary period, and that we are currently witnessing the beginnings of this phase. When taking into account the current stimulus package, as well as the monetary policies of the Federal Reserve, he warns that we are on the edge of hyperinflation. The identification of long-term trends, the maintenance of a strong margin of safety, and the avoidance of market bubbles are the three pillars that make up Michael Burry's investment philosophy. The fact that he was able to accurately forecast the collapse of the housing market in 2008 is evidence of both his analytical prowess and his capacity to discern trends before others. Investors would be well to pay attention to his ideas, as he predicts imminent market bubbles and hyperinflation, and to take appropriate safeguards to preserve their financial interests. Now, it's your turn to weigh in. Do you agree with Burry's assessment of the risks posed by current market conditions and the possibility of inflation? Or do you have an alternate viewpoint on the situation? Tell us in the comments section below. Don't forget to like and subscribe to our channel for more financial and investment tips.